Hey everybody, this is AskSlim Live, March 16th, 2021. Information and support for traders and investors in a time of crisis and beyond. We're going to have some fun here. Got a little business to take care of first. Everything that we provide for you here at AskSlim is for entertainment and educational purposes only, not to be construed as investment advice. That's everything that we do in all forms, whether it be in video or it's anything that we put out in any kind of reports that we give you, anything that we answer you in email, all of that, it's all for education and for your information. You should always be consulting with your own trading advisors before you make your decisions. The live events that we do are not part of our memberships. They're doing this. We're doing this in this special time of needs where the markets have gotten absolutely crazy. And even though COVID-19 is beginning to subside, thankfully, and we're getting all of these vaccines done, there's still crazy markets out here. So we're going to stay with this, and it's been really good because our members have really enjoyed the AskSlim Live. And I know that because people that don't attend send us, I want to know, are we going to be putting it up in videos? So we have a lot of fun with this, and we're glad to be bringing that to you. We'll always protect your identity. We never share your information with third parties, and we want to make sure that you know that when you sign up with us that it's all safe. And we can't, even though we're doing that, we cannot protect you as far as being completely anonymous in this, because we do put this up for public viewing for all of our members and sometimes out on YouTube. So participating in this acknowledges that you understand that and agree. And you get all of our legal by going to AskSlim.com. Today's host, we have me. I've actually, May 20th will be 47 years since I've been a trader. I became a member in the CBOE at that time at age 24. I've traded almost every single market that I could think of. And all over the CBOE pits, all over Chicago Board of Trade, on the Mercantile. I traded in many of those pits, and I even traded in the big S&P pit before even E-minis came about. I was one of the original traders in the OEX pit for OEX options, which nobody even trades anymore, basically. So I've seen a lot of it. Saw the birth of put options, because when I started to trade, there was only call options. So I was there for the pilot program on the CBOE when it was just born at that point. So I've seen a lot of markets. I've been a hedge fund manager, coached countless traders out there. I did the AskSlim show on Tasty Trade, AskSLM, for 3.5 years. And I actually founded AskSlim.com way before Tasty Trade, but kind of developed out of me leaving Tasty Trade and then RV joining me at that time. So we've done an amazing job, this team. We have a great analytical team right over here with huge amount of experience. Matt, 20-year technical analyst, protege of mine, graduated from AskSlim coaching program, was a managed futures broker. He is COO, Director of Product Innovation at AskSlim.com, and a partner here at AskSlim.com. RV, 10 years in the investment industry. He's got an MBA, and he is really a sharp guy. He's one of the experts in cycle analysis, of course, taught by me. Started learning it all on his own, and then came to me and said, hey, I know this stuff. You're probably going to want me sometime. Not exactly like that, but that's how it basically ended up. So we've done an unbelievable job building what we are building right over here. He was portfolio manager for the Student Endowment Fund at Boston College. CFA, 7 years been with me, and he is Vice President of Business Strategy and Elite Cycle Analyst at AskSlim.com. And now, as of just a couple weeks, RV is a partner in the business. And I'm really excited about that because, man, has he ever worked hard and is he ever well-deserving of partnership in this company. So we have 3 partners here in AskSlim right now. And I purposely made this all happen because at some time I'm going to go away here and these guys are going to really run it. And they're doing a fantastic job building it now anyway. So this is we're entering into our growth phase in here. And the more we have membership, and it's been unbelievably growing, the better things that we'll develop and bring to you. And that's all we want to do, is make you successful, because when you're successful, we're successful. So that's it. What are we doing today? Well, I'll give you a little market brief. And then Matt is going to revisit chart streams again. We did this 2 weeks ago, a little bit differently, and we're going to show it to you this time in a way where we're going to look at where to access it, the symbols that are available, member level availability, the resource and usability materials, best practices, so that you get a good handle on that. The chart streams aspect of the stock index report, which is the intraday indexes that we put out every morning, is just heavily used, and the members really love that. So it's amazing how that's growing also, and that means we're getting a lot of intraday traders, short-term traders, that are becoming new members, which is really exciting. We want to answer that need also. So there's a lot of you that are going to be on here, new level 2 members that have come on in the specials. So you might have some questions about that, and hopefully that'll all get answered. And then we'll open up the express round. Your questions should be in the Q&A so we can track them properly. So when you have them, put them in there, whether it be about our services, trade planning, chart analysis, other trading issues. Remember, it's our level 4 members that are able to request charts from us, a couple charts a week, so they get 8 custom-made charts a month if that's what they want. And this is now an opportunity for you as members, other members, and other levels to make those requests. And we'll do the best we can in about the next hour to bring all of this to you. Guys, you want to say anything before we get rolling?
Excited to be here as always and interact with our members.
Let us rock and roll, guys. Let's go.
All right, let's go. Love it, Artie. All right, so we're going to start out by looking at some charts. Just I want to talk about what happened today. Well, I've been gone for 2 weeks. I don't really want to talk about 2 weeks. But I do want to talk about the fact that the market has been very interest rate focused. And the bond market, which turned negative, and we turned bearish on it months ago, and that has been very right. We actually had objectives in the 10-year yields of about 1.6 and then 1.9%. So the first objective was made, and it was made very, very quickly, and investors didn't really like that. I mean, they started to sell the market when that happened. Now the question is it just coincidental, or is it some kind of a cosmic thing that went on, that all happened at the time when we were looking for a pullback in the stock market? So the pullback came and went and almost did no damage except to some of the tech stocks. And the tech stocks are susceptible to movement in the interest rates. So they're the ones that got hit the most. We saw the 20-year auction come today, and interestingly, it almost had no effect, even though the 20-year auction was great. It was expected last week's 10-year would go well, and it really did. And the market settled down a little bit, but it's all temporary. And today, with good 20-year auction, you didn't get much movement at all. What it says is that interest rates want to go up. And when you look at the GDP expectations for the rest of the year, the GDP rates, the top one I've seen is about 7.3%. Mostly they're looking at about 4.2 to 5% for the year. So there's a lot of upward pressure on interest rates, and that might be a reason for concern. Now, this Thursday, if everything works out right, I'm going to do a big picture analysis video on the stock market. So I'll talk more about this at that time. But there are signs interest rates are still going higher. And with interest rates going higher and the economy growing the way it is, those things that supported the stock market for the last year are likely to be gone. The possibility of getting a lot more stimulus out of the government, whether it be monetary or fiscal, is much less. And the markets are going to look at the point of tapering and those type of things. And you know what markets do? They get ahead. So while we're positive in the market right now, you got to really wonder how much upside there is. So I want to kind of preface everything I'm going to bring you right now with that. So let's take a look here at the S&P 500. And as you can see right over here in the S&P, you are seeing what we have shown over these last couple of weeks. Let's just look over these last months, I'm sorry. And that is that there was likely to be a correction that came. in the stock market. Originally, we had looked for, gotta get my pointer up here. I can act without a pointer. We originally had looked for the market to have a pullback of about 10-11% when we were looking for an earlier peak over here. Then when it got through all the resistances, we started to upgrade things. You can see an upgrade note here, February 2nd. You can see an upgrade right over here on the translation in the market. That means the minor cycle, how that translated in December. So that's how early we were upgrading things as the market was telling us. That's the thing about cycle analysis and the way we've adopted it is that we're just going to let the market tell us. So where we upgraded right over here in December and then upgraded right over here, what that means is that the expected corrections are less than what we had before. Once it got really, late over here and we knew there was only some weeks to go, we had been looking for a 6 to 7% drop in the market. That would have taken you right here to the 23. It ended up that this was 5.7%, which goes in history of one of the least amount of declines ever in a intermediate corrective period. There were a couple back in the last decade that were about 4.2%. So there's been some that have been stronger than that. We believed that once this was over with, the market would then be rising again. And you can see that's what happened. So our timing on this was great. Here's the timing, the time frame or the range of times in here where we thought the low would come in the nested area. It was almost spot on right over there and then began the rise again. So we're now in rising phase right over here. Where does the rising phase get us? Well, I don't want to go do too much because I want to do this on Thursday. But you can see in here that upper projection right over there, which potentially gets you over 4,300 in the S&P 500. The upside timing on that we're looking at really takes you out to probably May, June, something like that. Now, what's important is that now we're in a rising phase. Now we see this, but we also have a key level right over here, which is at 37.23. If this market were to fail and move down below that level, well, we know we have a bull market top. I mean, it would be so clear, the probabilities would be so high of that. So we also have resistances or targets up here on the upside, and the bottom of this fib extension zone is about 4,300 right over there, and the top of it right over here is at about 4,470. So those are outside moves as far as I'm concerned in this time frame here. The most likely, I'm going to give it to the 61.8% extension is somewhere up around 4,200, but still that's a pretty good gain that we would get in here. That would be something like 230 points, something like that, and that would be about 7% more on the upside if it were to get up there. So that's pretty strong when you look at that. Now, what I want to do is I want to now look at the other indexes and see how that compared in this corrective period. And when we look at the Nasdaq and the X, you can see in here that, well, we have the cycle lines in there also. So you can see where the actual lows were versus the ideal. Remember, for those of you that are new, these cycle brackets are the ideal, as if every single cycle had exactly the same length. But that's not the case. The principle of variance tells you that that won't happen. And it says that you probably get the 3 or 4 bars on either side of that low projected timing where the real lows come. And you can see what happened. This, just like the S&P 500, was pretty much right on. Now note that this was 12% on the downside. So it's not that the decline didn't actually come with some significance, because it depends on what index you look at. So 12% on the downside right over here. And note that the momentum in here is down. So the Nasdaq is much weaker. And you could see that our upward projection is to at best a double top, which is at this 50% fib extension right up over there. The Nasdaq stocks don't look very good, and there's money coming out of them, pouring out of them actually, to buy these other things that are driving the Dow up to a new high. Those are the recovery stocks. Those are the money going into the value versus being in growth, where it's been for years and years. that kind of a rotation can last a long time, and that's what we're in right now. So 12% drop, and now we believe we're in the rising phase right over here, which we believe will be substandard. Russell's got tons of money going into the zombie stocks here. Remember, something like 25% of these companies could not be even in existence without the Fed putting such a low rate for them to be borrowing money. Overall, if you put in all the losing companies in the Russell, there is no real earnings in the Russell, but here we are at these stratospheric prices. I want to note that the decline during this corrective period was about 11% right over here. So the phasing in here that we see, rising phases and declining phase, is extremely bullish where you look at that, because the translations, in other words, at what point in the cycle did it peak? Powerful right-hand translation that we had right over here, powerful right-hand translation in the minor cycle right over here, and in the dominant cycle here. All of those tell you how strong the market is. And look, while the market was correcting, momentum never gave way here at all. That's how strong the Russell is. And our upward projection right in here for the Russell is to that dominant 61.8% fib extension that comes in right over there at about 24.88. So there's time, you get the idea of time and price. We're really looking like we're up through May, maybe June, and then down. Again, were it to break below that last low, we know it's all over at that point, because the cyclical pattern will have translated on the left side, and it would say that there is a lot of trouble. Now, you can see that big cycle right over there. Well, I'll address those when I do any kind of a big picture analysis, but those are really what's going to affect the market in a very significantly negative way. I'm staying still on the weekly, and I want you to see in the S&P 500, there are actually two of those cycles in here. This one right over here that goes out to the fall. This one right over here that goes out into 2022, which is going to be one that I focus on in a big picture analysis. And those are going to be putting very significant downward force on the market at some point. But right now they're not. They're actually putting upward force in the market. And again, teaching cycles, how do I know that? Well, how do I know that, other than the fact that the market's going up? Well, it's the configurations that we're seeing in here and the translations. This can only happen under conditions where the very dominant upward money flow forces are pushing up. What you're looking at here, all of these funny lines and all these things that we're fudging around all of the time, are just so that we can understand money flow.
This is our level 2 trial membership. We are starting this right now for new subscribers. This will not last long, and this is the last time we will have this pricing right now. What this includes is the stock index report live stream that you can see. What that is live right on your computer. You don't need a special platform, of the S&P 500, Nasdaq, and Russell. I'll show you that in a moment. Our stock index report, which we put out every day, the snapshot, the SIR, you'll get that every single day. You'll get our weekly stock index report, our weekly ETF review, Slimulator momentum tracker, which is for position traders and investors, over 1,000 different stocks that you could look at, ETFs, with our algorithms built into it. With momentum conditions, you're going to see fantastic stuff in there. Just amazing. You'll get our complete library, 600 plus videos in 9 categories that I've done, teaching all kinds of aspects and showing all kinds of analysis in the stock market, and our new trader workbench for trade planning. Absolutely amazing. What's more amazing, you'll get all of that for $22.50 the first month. There are even bigger discounts if you take quarterly discounts. How can you possibly pass this, especially if you're an active trader? Just go to AskSlim.com, top of the main page. You'll see the special link there, and you'll be able to sign up for the 1 month or for the quarterly. Or if you have questions about that or have an issue with that link, then write to Matt at AskSlim.com. Let me show you just some examples of what is in here. Just absolutely mind-boggling. This is the SIR live stream. Now, this was from the 24th. This was from Wednesday, the 24th. And this is for our intraday charts, really for short-term trading. These are 15-minute charts of the S&P 500, the Nasdaq, and the Russell. What it has on here is what we call our reversal scout. This helps you with your directional decisions. And when it turns up, which it did the day before, you generally get upside moves. You're going to get our resistance levels right in here, and you're going to get our, these are called acceleration zones, the yellow ones. The probability when they enter the acceleration zone that they will continue is extremely high. You can get the numbers from that if you want. And once it gets in there, you can see it just explodes through. This is how you catch the big trades. And sometimes when it dips right into the support, as you could see right there and right there. Just absolutely great. And you can also see which are the strongest and weakest of these indexes, which was really clear as the Nasdaq was the weakest and the Russell was the strongest. And you could see that. It's incredible. That is what you saw on the up day on Wednesday. How about the down day on Thursday? Let's take a look right over here. And yes, what happened was you got this early downturn here in the reversal scout, and it went down all day long through all of those zones right over there. Just absolutely incredible. Through the acceleration zones where you catch the biggest trades, and then got into this area, but it was late in the day and couldn't even turn around, as you can see that. So just fantastic information here. How about what's going on today? Let's put it up live right now for you to see. Here you go. This is now live on my screen. And we started out the day choppy, moving down, but then when the reversal scout turned up, you can see what happened, and it came up right to resistance, and you're getting some resistance right over there. You get the Nasdaq moving up through those acceleration zones. Beautiful. Hits the resistance, now pulling down. But you could see what's going on. What's the weakest index right now? Clearly the Russell. So if you wanted to be doing a pair trade, well, you would probably be buying Nasdaq today and shorting Russell. If you wanted to just buy and you didn't know which one, well, you could see which is the strongest one in here today, which is the Nasdaq. Just absolutely fantastic. In resistance right now, failing from resistance, getting through the acceleration zones, hitting resistance and backing off. If you're a short-term trader, I mean, this is just unbelievably fantastic information when you look at that. So that is a look at the live SIR live stream, and you can have this right on your charts. Just absolutely fantastic, amazing. Here is the library. 3 new videos every week, 9 categories, over 600 videos. I'm not going to read it to you. You can read it, but just incredible things. You can see trader psychology. Got lots of great things in there about how you can deal with personal issues that may be getting in your way of success. So just unbelievable stuff, including Future Speak, which we do every Wednesday, our certainly most popular member video. That's what's included. This is the only until March 14th. So this is essentially about 2.5 weeks. The final opportunity at this price for all of these great things that you're going to get. You saw that, $22.50 for a 1-month trial, quarterly discounts, bigger discounts. Go to AskSlim.com, top of that main page, and you can sign up right there, or questions right to Matt at AskSlim.com.
And using the multiple time frames. So that's what we do. That's why we work so hard. We want to know where the money's going and how long it's going to go for. And when it changes, what does it mean? Well, that's what the studies of cycles are here. So now let's go to the daily charts, and something significant happened right in here. And that is, you can see that we had a 24-day cycle. That was after averaging 30s for a long period of time on these dominant cycles. So the cycles shortened. They could have gone to 30 and it wouldn't have affected the weekly at all, but there was a lot of anxiety to be buying again. So this shortened up right over here. You see we have the cycles that come down and nest right over here. Well, that's the downward force from this went away early right over here. So we had been looking for a low 3.8 to 3.15, but that low on 3.4 came a bit early. We were questioning at that point is there a test coming? That's what that message there is there for our subscribers. There was no test. The upward momentum was too strong. And you can see in here that all of the slim ribbon PO, which our level 4 members get, only went neutral in here and then turned positive again pretty quickly. So momentum, as you can see, the slim ribbon widening is strengthening right here. So we have the intermediate patterns pushing up. You have these strengthening patterns right now on the shorter term, and it gets right up exactly to the top of that fib extension right there, and then stalls today, but not by much, you can see. So that's somewhat of a key level. But based on everything, the way it's pushing up in the intermediate and on this, we have another upward projection right in there. That's the green one, because we want to really look at what is the most obvious that's going to happen and what would be the level. This is about 40.85. This level right over here is about 41.40. So those are very reasonable places for the market to move up to. There's a minor cycle in there that runs 8-9 days that is out of phase with these other cycles. And that right now, this is an 8th day. So we'd be looking for a minor pullback right in here somewhere, and then beginning to move up again. Tiny little pullback right now would just be viable based on everything we're seeing in here. And then moving up again. The same thing happened in the Nasdaq, where you had that cycle shorten up, and you can see right there. However, this cycle was a lot more negative, and you can see the PO telling you that, the slim ribbon PO, where this actually went negative and is still negative. It's almost going neutral right over here that I could see. So you can see how much weaker it is, and that's why we have this as a sell zone, where we believe that this would be where it would stop. We don't put a sell zone on the S&P 500 because of how it's configured, but we would put one in here because there's some likelihood of it stalling and pulling back. And this is where that 78.6% is at 13,518. That's kind of our reevaluation level, where we'd say, okay, it gets through there, then it's strong enough to get up and potentially test that double top that we're looking at. So the Nasdaq, a lot weaker when we look at that, and the Russell right over here is a lot stronger. And you can see again, we're projecting it up. It got through the top of that fib projection right there. And this right over here is 24.85. This is 25.40 right there. And it gave you that little double star evening star. That's that smaller cycle coming into play. And actually the cycles in here are fantastic and shorter than in the S&P 500. So this was on time. And it actually was dominant in the whole market because that's when you made the lows right over there. So that's where you see this rising phase come in. And now we'd be simply looking for this to turn back up again in a day or so, and maybe be getting up to these levels. So everything that we're looking at, except for the NASDAQ, is bullish. The NASDAQ we'll call kind of neutral and weaker, but the S&P 500 bullish, the Russell bullish, and the Dow bullish, but I don't do the Dow because it's very, very redundant and we have enough work to do when we look at this stuff. But look at the cyclical patterns in there. Look at the perfect alignments. Well, it doesn't stay that perfect for that long, but we can enjoy it while it's there anyway. So we'd be really looking for a rest of the day and then maybe going up again here in the Russell. So that was pretty long introduction right over here as we have looked at all of these indexes, but I wanted to look at them in a way that you could really get a good feel for the work that we do and share with you what's in my mind when I'm looking at these things and what I think is important. So got some people that, say I'm always bearish. Well, I'm not always bearish. I'm bullish when it says to be bullish. I'm bearish when it says to be bearish. Right now it says bullish. So I'm bullish. The patterns are bullish. Matt, take it over.
All right. Excellent instruction, Slim analysis as usual. So in this next segment, we're just going to spend a few minutes. I'm going to be as brief as possible to give you a brief tour of our AskSlim chart stream service. So I'm going to share my screen here. And just raise your hand if you can see the screen. It's got a new slide on. Okay, great. All right, well, here we go. So we're going to cover where you can access the chart streams, what symbols are available, for which membership levels, and where the resources are, usability materials, and best practices can be found for this. So first we're going to talk about access and which symbols are available. So we'll start with level 2. So chart streams are available from membership levels 2 through 4. And with level 2, if you're a level 2 member, you want to go to your dashboard and you have access to the SIR intraday chart grid that we chart stream out, that we broadcast. And that can be found and accessed through our Zoom link that we send out each day. And we send that out via email. You'll get that anywhere between, let's say, 8:10 to 8:25 Central Standard Time in the morning. You can also find it in right here on the top of the page here where you have SIR intraday chart stream Zoom link. So for whatever reason, if you don't get the email, you can come here. It should be posted in here and ready to go. Like I said, between about 8:10 and 8:25 each morning. If not, you can contact me at Matt@AskSlim, and I can look into what that issue is. So that's where you can access it. And again, level 2 members get access to the SIR intraday chart grid. Next, we're going to talk about level 3 members, and they have access to all 8 of the chart stream channels. So where are you going to find that? Well, as a level 3 member, you're going to go to your dashboard. If you scroll down, or you can go to your workbench, and then you're going to go to chart streams. And when you click on chart streams, that will open up the broadcasting studio here, and then you can pick your channel that you want to view. So if you wanted to view the SPX, you simply click on the SPX, press the play button, and then you would go live into the feed. So those are the 8 channels that are available. You have, again, the SIR intraday channel, which is available to level 2 and then level 2, 3, 4. And then for level 3 and 4 members, they have access to all 8 of the symbols here. And each one is separate. So if I go to GLD, which is the gold ETF, you can see here that that has our custom analysis and indicators in our multi-time frame grid specifically for GLD. So those are the 8 symbols that are available. And in terms of level 3 and level 4, level 3 and 4, you can come to your dashboards or your workbenches and click on chart streams, and then you access the channels directly by clicking on them. We would like to thank everyone for their participation in our chart streams survey that we put out a couple weeks ago. Your feedback is always really important to us and helps us with our decision making as we look to enhance and adjust our services and products to better serve your trading needs. So we got some good feedback, and we are going through strategy sessions and thinking through how and in what ways we can expand this opportunity. And nothing is cast in stone yet, but we are looking to complete our beta testing here over the next, let's say, 4 to 6 weeks, and launch with potentially a couple more symbols. We've had a lot of feedback in terms of silver and then also TLT. So we would look to keep this set here, maybe add those 2 others in. Again, that's not cast in stone, but based on the feedback, that would be sort of round off our first version set of symbols that we would do. And we're also looking at potentially expanding into the futures market, Forex, and the index futures. So we'll have more on that as we go. I wanted to give you that update and also say thank you again for that participation, because it is extremely helpful to get the insights from our members on what they are using, what you have to have, and what you need to have that you don't have. So again, thanks for that participation. All right, so level 4 members. Level 4 members have access to the 8 chart stream channels that we see here. But a huge difference is that level 4 members also get direct access to the raw chart streams multi-time frame chart grid. So as we go back and we look at the SPX here, this actual grid here that's being broadcasted, the level 4 members get access to that. And that's been specifically designed to give you an efficient way to capture a snapshot of the key technical insights at any moment of the trading day, especially for near-term and short-term outlook periods. So what I'm going to do is I'm going to show you a chart of Apple with the raw grid here, or our multi-time frame grid here with Apple. And this is what I'm talking about in terms of the raw grid. So this is, we build these out on our TOS platform, and then we share this with the level 4 member in terms of this raw grid. And level 4 members can go in and they can change it to whatever symbol they want. And that's really important because these custom charts and indicators help with a number of key trade planning aspects. So we use these to help us with determining current directional bias. So based on our 2 most reliable momentum indicators, obviously the slim ribbon, and then also our reversal scout, we utilize those for our directional bias. We have other supplemental indicators we use for directional bias. Here is our, for those of you that are new, this is our slim ribbon, as Slim showed earlier, and then we have our reversal scout, which changes from purple to green based on whether it's a negative condition or positive condition. This is the 2-hour chart, as you can see here. And then we also have on here as supplemental indicators to help, we have our MCI, market condition indicator, down here. We have our option bias indicator, and then we have a couple custom tweaked off the shelf. We have a stochastic momentum index that we use and that Harvey and I have tweaked to help with, get a sense of, again, a complementary sense of the directional bias, as well as when markets are very extended. And so we have all these tools wrapped up. They all serve a purpose, and we have a resource center to go through all of this. But I also wanted to show something that not many members know, and if you're brand new, it's really important that you know. If you have access to our focus list of symbols as a level 4 member, many of you probably see these types of grids like this, where you can go in and you can look at each one of our symbols, and you actually get under the hood and you can play around with the indicators. You can draw additional levels. You can do whatever you want. You get access to the raw materials per se that we use to put this information together. But one of the things you can do is you can save these drawings and you can apply them. So as you can see here, I have a daily chart and I have the weekly chart for Apple. And if I really want to get a big picture sense of our methodology at this multi-time frame experience and get what we like to say as sum of the evidence, then I want to apply my cycle analysis here, because then I can get a picture of our methodology forecasted in direction, time, and price. So I'm going to go to my daily, and I'm going to go to my weekly over here. And first we'll focus on the daily. You can see now that I've overlaid that information onto this chart. And for those focus list of symbols, you can do that once you see them. It's extremely easy to do. We're happy to show you a tour. We'll probably put out a video. We probably have a couple of those out already. But that way you get that full sense, the full immersion into our methodology now with the cycle analysis, with our key levels, and also with our momentum indicators to help us get a feel for our directional bias, in addition to the cycle configurations, as Slim mentioned. So you can see here in Apple, just as an example, that we had on the 2-hour chart. So if you're a near-term trader, we like to look at the 2-hour chart for our direction. We look to the 15-minute for our entry opportunities, and then for our position sizing, we typically look over to the daily chart. So back on 3-9, you see a shift in the reversal scout. That's how we have that scout, is to pick up those changes and give us a little bit of a head start when conditions can be changing. And so if I move over to the 15-minute here, go back to the 9th just to give you a sense of what this looks like. So the 9th here, the 9th, we popped up. We had the shift here in the reversal scout. We popped up on the slim ribbon, turned green. We had a little consolidation, but you can see this consolidation. This is why these are important. The reversal scout stayed positive here. And so then what we're really looking for is that next shift. So we see the 15-minute shift here, give us a little warning, then boom, the slim ribbon turns positive, which then provided you with some good trading opportunity. Again, near term, what we look for is the next 1 to 5 sessions. So we've structured these grids very specifically for outlook periods that you can trade off of, whether that's near term 1 to 5 days, whether that's short term 1 to 3 weeks. And we've set these up, and we have in our resource area very detailed user guides for that information. But I'm going to come back over here for a minute, and I want to open up. So once we apply this here, then we can maximize this, and you can get the full picture again. So you get the weekly chart, and I can go back in and I can bring it all in nice and tight. to get that at a glance perspective of what's going on. And again, as I mentioned, you can flip this to any symbol that you'd want in here to get an idea of that perspective if you have access to these grids. So that's the demo I wanted to show. That's the overview. Let's see if we have any questions that came in regarding this. And if Slim, RV, if you have anything else you wanted to add, feel free.
I think it was great. Absolutely great.
Great job, Matt.
Great.
Yeah.
Good to hear. Yeah, really powerful stuff. All designed to help us with our trade planning at that multiple time frames, whatever suits your rhythm for your style.
One thing I will add simply is that if anybody's looking at these charts and say, wow, there's a lot of stuff on there, it really feels complex to me, I don't know how to sort through it. I think that the more you do it, the more you work at it, eventually you just look at them and at a glance, you're going to know what your directional decision is.
Yeah, now it's within seconds, literally, we have a sense of it. And then you use the other indicators are on here not to make it more complex, but to give you that some of the evidence, additional information that supports or negates that information.
Yeah, Scott W. asked if there is a video or some document that demonstrates a possible trading strategy using all of these tools.
Sure. Yeah, we have
specifically looking at the 15-minute for entries.
Yes. Yeah, we have a resource area. I'll jump over there. And I plan to do more of these strategy sessions. RV and I have done some of these in the past, and that's something we're going to get back to and allow for members to ask us to put in a symbol, and we will walk through at a glance what the directional bias is and how we look at structuring our trade setups based on the information on these. But in terms of the resources, so for level 2, if you want to look at the SIR grid, which just to make sure everyone knows which one I'm talking about, that's this grid here that we broadcast out, and level 4 members do have direct access to this grid as well.
Look at what the rut was telling you all day long.
It's amazing. So let me always talk about that
I do.
The pairing here, and see, this is the importance of the reversal scout. I mean, this thing went negative, and even though it bounces here and there, went through all the acceleration zones, even blew through, the key intraday support at the end there, but it stayed negative that whole time. And then, it's great information. I know it's ours, but it's so helpful as traders. And we're all traders. And this one came through the acceleration zone into a resistance area, failed, pulled back, went through an acceleration zone into some more support, and then bounced back. It's wild. It's so helpful though, to give you those guardrails per se. Good stuff. All right, so that usability information is in that level 2 dashboard. Click on the area here. It's the same for all the different membership levels. And if you go into the usability guide, we have a legend here, a user guide that you can download that goes through everything. And we also have 2 in-depth videos where we have questions that come from members that we did in other AskSlim live events. And as I mentioned, we'll do more very specific events where I'll come in and me and RV will answer questions regarding usability on these tools. For the chart streams, when you're in your main page here and you go to chart streams usability resources, that will open up all of the resources for chart streams. It's got a glossary of all the indicators that are on the grid. So every one that we use, there's a detailed overview, and you can download that PDF. There's also the trade setup guideline. So it goes through what we consider to be the primary bias, primary and secondary signals, position sizing, basically the definitions. And then we have overviews in terms of the near-term outlook, short-term outlook, momentum divergence, buy warning example. So there's all kinds of examples in here.
Great.
I hope that answers those questions.
There's a question here. There's 2 more questions before you get off of there, Matt.
Yeah.
And either you guys can jump in on this and tell me if you're in agreement. But there's a question: how do you use the slim ribbon versus the whole moving average when they are not in agreement on the same time frame?
All right, so let me go back to Apple here. We can talk about it. So the question was when they're not in agreement on the same time frame.
Right.
Yeah. So the reversal scout is a more sensitive indicator, and that's why we call it our scout, because it's looking out ahead. The slim ribbon is for us it's a momentum trend indicator. It's a reflection of that trend, of that momentum. So it's really going to help hold you in as you look at Apple here, right? It really holds you in. Even when you have that rally, the slim ribbon keeps it negative here. The reversal scout was too. But when you have opposite conditions, the reversal scout's typically going to turn a little earlier, especially when something has been in a downtrend, as an example here. And then when you have them go in an alignment, you know you have a higher confidence that that shift is likely have taken place, and that maybe when we get a pullback here in Apple, if the slim ribbon stays positive and the reversal scalp is a slim ribbon, there might be a buy opportunity in the near term. Again, you have to really decide your time frame.
Right. Somebody asked about the reversal scout, if it's available on other platforms, or at least what are the settings of the Hull moving average to mirror that?
Yeah, well, we give that out for level 4. I mean, it is something that we spent a lot of time to customize. So if you're level 4, feel free to reach out, and we're happy to help you with that.
There you go. And there was one very, very good question here regarding the workbench.
Okay.
And it's Lou is asking, can the workbench area or my trades or the trade worksheets be used or modified to use as, for record keeping, to track winners and losing trades without entering all of the other info, a scorebook, so to speak?
Yeah, you can. I mean, obviously, we're going to look to advance it with the possibility of importing, exporting, importing, maybe your positions. So some of that is easier to get the information in. But if I go to the workbench and I go to my trades, there's some example things we put in for some members here, but let's see here. You can go in and you can create a new trade idea or symbol for yourself. And you could, I think there are a couple requirements in here. You obviously have to have the symbol. There might be price at the time of analysis. If that one is a constraint, we could probably remove that one. I'll look at if we can remove some of these. If someone wanted to just use actual entries, actual exits, and then the outcome, then that could serve just as a simple scoreboard for them. So the answer is yes. I'm glad they brought that up, but we'll look to maybe remove some of these requirements and make it easier for you to utilize it that way.
One of the things that we've discussed, and I know it's down the road, is more of a journaling type aspect to this, with like a trade ledger in it, where you can keep track of your wins and losses and your P&L through specific periods. And if that's interesting, raise your hand. That you would want that kind of tracking where you could look back. So there's a lot of people raising their hand. Whether they could have like a journal that is basically a ledger.
Excellent. It's good to know.
Yeah. So let's put that on our list.
Absolutely.
Right.
So yeah, we're close. We're close with that. We're real close to having a real well-rounded set of tools there.
Right.
That would probably round it off.
So I think we have all of the questions that are related to all of the stuff you presented now answered.
Excellent. Okay. Good. Very good. If there is anything else, feel free to write me at Matt@AskSlim. I'd be happy to help.
One thing Ritus was asking about the yellow dot versus the green. That's on the OBI and option bias indicator.
Sure.
And yellow is a neutral condition for your directional decisions on your optionable positions, or just for directional decisions. I want you to note where Apple made the low, you could see the orange dot, which is an extreme oversold condition that you see there, and it just nailed the bottom on that. When it's yellow, it's neutral.
That's why we have these in here.
Yeah.
To give you additional context.
Right. That's great. Okay.
Yep. Okay.
So now we can get to all of these analytical questions. We had a couple that came through with people that couldn't attend. Is that right?
Yes.
So let's take those. RV, we had one question, somebody that wanted US Steel X. Could you
Yeah,
share your
US
analysis
Steel.
on that, please?
Sure, we'll do. So this is a weekly daily of US Steel. Just let me know if you guys can see that by raising your hand,
Yep.
please. Okay. So appreciate that. So on the weekly, which is here on the left, you can see we moved up off of this low right here, right? You can see the rally. Then we sold off and almost moved through that low, but then saved ourselves and moved all the way back up. So a huge range here. But overall, we're looking for this to actually move back down here. And this is when the low is due. So this is kind of an area where we would look for this to really roll down from. And you can see that here as well. We're basically looking for this to form a high and then roll back down and then get one more push up that then likely fails because it would look like this. It would look like a sell-off, another attempted rally, and then one more sell-off to basically make this low. So that's really the overall picture here in US Steel. Kind of looks like it isn't going to go up in my view at this point here because it's had this large move down off of that low, off of that high. So pretty bearish look here setting up in
But at
US
some
Steel.
point, being we're in a corrective phase or entered into this corrective phase here, we would probably we'd probably look for a short-term short side trade, right?
Yeah, we would look somewhere over here. We would look for that to then move lower and then fail. So this is probably what we would be looking for out in, let's see, April timeframe, like the early to mid-April timeframe. That would likely be the area that we will look for a move on the downside. So,
right. See, that's one of the beauties of the fact that, you know, we have a pretty significant analytical universe. We don't really have to just put trades up to put trades up. We just wait for what we believe to be the highest probability entries. And, you know, it's we're going to probably be right on it 65% and probably right directionally about 70% of the time, which you don't really need much than that. That's a huge edge. Don't go away, R, because Miguel is asking for AMD. Do you have that one?
I don't have AMD ready at the moment. No, Slim.
You don't? Okay, I might. Let me grab the screen then.
Okay, yeah.
Well, that's not it. Okay, so I can give you a pretty good look at it here. As you can see in here, this is really interesting because if you look at where the ideal bottom was supposed to be is right over here. And now you see the low that occurred right there. But it only rallied for a week and a half after that and then turned down. So this is where we're in an analytical quandary. And that is, if this is the low over here, well, it came within the principle of variance. And that certainly looks like it could be the low, but even the rally is not enough for us to know. So you see in here, we have resistance put in here in two scenarios. One is this extreme left-hand translation, which then would say it's very negative. The other is a low that came late because there was so much selling, but it came down, gave up 100% of this rally, which is negative. So in either case, whether it's this low or this low, the condition is negative. We'll know more when we learn how it acts in this area. But if we just turn down and test this bottom again or break it, well, you'll know that this is where the low is coming out in June. And there's going to be a ton of downside risk in here. So right now, when I look at this, I'm only interested in the short side. I'm not interested in the long side. And if this were to be a major top forming and this cycle was correct, it was shifted way out over here, then you could see you had this left shoulder, this head, and this right shoulder building right over here, which would be looking for, this is 99 down to the neckline of 73, which is 26 points below 73, which is a target of 47 way down over here. So this could be a very negative occurrence that's going on here. There'd be a lot of people that would say, well, I want to buy it. It pulled back, it hit support, it's starting to move up. I think that there's a lot of risk to that. Let's see if I have a daily pattern in here, down here. And here's the daily pattern right in here. So you can see that it looks like it's the cycle shortened up a little bit. And you'll see our level 4 members, we put a note in there for them. Potential bottom and shifted cycle, we don't really know. It kind of looks to me like this could be a bear flag. Note the slim ribbon PO as still negative and about to turn down and give us a signal. So there's a pretty good chance that this is going to be coming down again here at some point. Then try the upside again into those resistances, and they're probably going to fail again at that point. I want you to notice upward bullish configuration, bearish configuration. That bearish configuration gave you a sell area. We didn't put it in there, but we could have easily. And when you look at, I'm just going to grab the fib tool right over here, and you see right in here, you're going to have failed right at the 61.8%, and then came right down after putting that engulfing pattern in there. So that would have been the perfect short side entry based on the negatively configured cycle. Usually a negative configured cycle gets you another one like you did right over here. When this makes a low, you'll probably get some better trading out over here, but it's likely to be a big fake. So that's kind of a deeper look at AMD, and hope that was what you were looking for. All right, so we had somebody that wrote in and asked for us to put silver on the analysis, and we have also a request for silver here on the. I thought we had another one on the list here. Yeah, Rashmi asked for it also. So we're going to look at silver, which of course is going to be on Future Speak tomorrow. When I'm doing this live event and doing Future Speak, I usually get these charts ready for tomorrow early. So these charts have already been done. I want you to note in here, silver momentum has turned down, but cyclic configuration is positive. Positive on multiple time frames in here because, or multiple cycles, because you have this big cycle right over there. I see people raising their hand. They see that when they look at it. Mando, I love that. Actually, I get emotional about that when you can look at these charts and say, boy, I get it. So here is this positive cycle. It projects to testing or taking out the highs here. This is the gold cycle in here. So you can see how we overlay that. Here is your minor cycle right over here. So you'll note this minor cycle was so strong, it could barely tick down over here and exploded to the upside. This one momentum was strong the whole time. Here, the momentum turned down. So now it's going to fight a little bit, maybe on the upside, but you're getting right in here where this is about to turn upward. So we're expecting some upward movement in here over coming weeks. The very least that I would expect would be 6 weeks probably on the upside there, over here, which would take you sometime out into April. When I look at the daily chart, you could see the last cycle in there was a neutrally configured cycle. These are the complex charts, and the structure, as you see in here, is weak. See that note right over there? Look at right in here. It's still hanging on the bottom of this. Look at right over here, momentum turned negative. Look at right over here, the signal on the PO. It doesn't make me real happy as a silver long to see all of that. This is going to need to repair itself. It's going to need to get stronger. So we have the minor cycle lining up right here where it made the low. This is pulling down right here. What we want is these next few days to be maybe just a little soft, not give up much, and then some strength come in and get rid of this negative momentum that we're suffering with in here. At very least, I'm projecting up here to about 2760 once you get past this minor cycle. Also note the nesting here with gold. They're both going to be moving up over here starting in about 4 or 5 days. So you got to get through some sloppiness in here, and then I think it's going to be moving up. Again, we're projecting up here to 2760. And if it really wanted to get crazy, it could get up to this fib extension levels up here in the 29s and even 30s. But it has to get traction. It has to lose the negative momentum conditions and get into where money is actually flowing in there with some power, which we do not have right now. The timing is right for that to get established. And if it doesn't happen, you listen to the message. The importance is the window of opportunity in these cyclical patterns. Right now, we're entering into a window of opportunity for a rally of some significance. If it can't happen, you must listen to the messages of the market. The market talks to you, and that's what we're looking for right over here. This configurations in here are still okay on the daily, and the configurations are positive on the weekly. The weekly is dominant, so we're looking for the highest probability is that the daily gets stronger. We'll see if that actually can happen. So hopefully that answered it for you. We have about 10 or 15 minutes left, and we are overwhelmed with questions. So I'm just going to take them in the order that I see them up here. George asked a question about the Fed, and will the Fed control the long end of the yield curve, and what might be the consequences of that? I can absolutely promise you that I'm going to give it at most 10% probability that the Fed does anything to control the yield curve. That's pretty small. That if they did so, the stock market would go down very sharply, because that would be some message that the Fed sees some ugliness out there. And I think that is a very, very small possibility. I think the Fed wants the market to begin the normalization process for them, and then they can catch up on it somewhere down the road, as then they can say, well, the market's told us things are getting better, those type of things. So I don't think you're going to get any yield curve control. I don't think you're going to get an operation twist. Those would be the two things that they would potentially do, and I don't think that's the case. In that line, Artem is asking, would not tomorrow's FOMC change the market direction to the upside, as nobody expects the Fed to tighten, and there's a wall of calls above the 4,000 level for the S&P, so the market can shoot up. I actually don't expect the market to move in any big way based on the FOMC tomorrow. They have signaled and signaled and signaled they're going to be doing nothing right now. I think that's what the market expects. They're not going to do anything to ease any further. I mean, that's a 0%. The only thing is, will they change one word in their whole statement that potentially says that they are seeing these changes in the market and they may be leaning to some tapering or tightening somewhere closer down the road than 2023, which is what they're saying. So, and I don't think that's going to happen at all. The question here, Slim, do you believe we are in a transition out of COVID stocks, that's Netflix, Amazon, etc., into travel, leisure, dining, those type of things? I think absolutely yes. I think that most of those stocks, which are the recovery stocks, the old value and value, I think they've come a bit too far, and I wouldn't be surprised to see a rotation back for a short period of time. But I think overall, the rotation we see now is going to last for a while. We have a question now for me to look at natural gas. I'll look at that for you now. I'm going to look at it again tomorrow in future speak, and then I'm just going to look at it quickly on here on the side by side so you can see right in here. Just tell me at a glance, what do you people look at this chart and see what to expect? Raise your hand if you think so. There you go. If it doesn't happen, if it doesn't materialize this way, will it send a message to you? Raise your hand. There you go. People are learning and listening. It is so clear when you look at this that the time frame is right for something happening here. And this is, I didn't just put these lines in here. This has been calling for this corrective phase now for weeks and weeks. When it had that big spike a month ago, we said, well, the low before that is out of place. The low before that came at the bottom of the third minor cycle, right on, spot on. When it had this rally, I said, well, unless something is changing very significantly, then when the warmer weather hits, this is going to pull back again and finish the cycle. And this alignment here aligned with this alignment right over here. And right now it's a bullseye. So if it turns up right now, we're going to applaud as this being perfect, as the analysis came in just as expected. So that's a look at natural gas. If somebody were to look at this and say, well, okay, I'm buying the piss out of this, this is the time to do so, I would say to you, that's not what we teach. We teach to look at the analysis, let the market talk to you. Right now, momentum is negative in here. And if you want to buy this, nibble, come in with a quarter of a position so that it's now on your radar. So you're watching to see what happens. If it doesn't work, you barely lose any money. If it is talking to you, you pile it on. Small loss, big win. That's how you get your numbers right. That's the look at natural gas. Lou is asking for platinum, silver, and copper. We gave you silver, and we'll do the rest of those. And he said if there's time. Thanks for that. We don't, so we will come back and we'll give that all three of those to you on Future Speak tomorrow. Steve is asking, Slim, can we see that we can see that the rod is strong, but should we expect to see more risk there since typically it's comprised of smaller cap companies rather than that are heavily resilient on credit? Yeah, that's a very astute observation. And they are susceptible to interest rates, as you say right over here. The Fed can be pushed sooner. They will get behind the curve here. They're not going to move until they're well behind the curve. And yes, at some point, the realities of the overvaluation of the Russell are going to hit home. I want you to note the downward turn. I'll look at this potentially on Thursday if I do the big picture in the stock market. There's a downward turn on junk bonds, JNK, HYG, high yields. Those things are starting to roll over, and it's very significant because history says when those roll over, they can get to the head of important market tops. That's one of the reasons I'm not projecting the bull market to get past the spring, because I think we're getting some indication there. Now I'm going to look at that, and you'll be able to see that. I'm not going to be able to answer all of these questions. We're just going to take about 5 or 6 more minutes. Len was asking, please comment on VIX as well as XLE. I'm not going to do XLE. The VIX chart I'm willing to put up because I have that ready for tomorrow. What we had said was that based on the fact that we thought the market was going to come down and then begin to rally again, based on where this peak was right over here, or this pop in volatility, we said that was out of place and that it would be likely that it would come right down again. This actually points to about a week or two of before you get another potential upward move in implied volatilities. So that's why I think we're going to get into a choppier stock market. You could see the timing here is 3-4 days away from a low in implied volatilities. It gets back under 20. That's pretty low in this world right now. So this says to me the stock market, remember I showed the minor cycle about to maybe have a day on the downside and then the market move up again. The next move up may set up a short-term peak where you can get a pop in implied volatility. This one aligns right over here with this one right over here. So that's what we're looking at. We don't expect to see any more significant downside in IV, and we're going to be looking for some increases based on what we see on that. So hopefully that helps you. Natural gas we gave you already. It says nat gas, XLE and nat gas are two of the trade recommendations. We don't do recommendations. We do ideas that may have been triggered today. Is that true, RV? Did those get triggered today?
I don't have either of those as trade ideas at the moment, so I'm not sure.
I'm not sure what he's asking about that.
Not sure.
If you're a level 3 or 4, you can send us an email on that. is there pricing on the stock available on the simulator? Well, the simulator's got over 1,000 stocks and ETFs on there. So you can get in there and look at it, and you can do all kinds of sorting and everything on there. Matt, do we have a video on that up there, posted there?
Yeah, we have momentum tracker videos.
Yeah,
I think
all
you
right,
might be
so-
asking specifically about, can you sort based on price? I don't think we have recent price sorting. No,
Oh, we
it's-
don't
it's
have recent
momentum.
price sorting. Okay, I didn't
No.
understand that.
It's momentum sorting we have and
Yes,
directional bias.
Right, gotcha. Morgan's asking for the Bitcoin chart. Morgan, I'm going to give you that tomorrow in future speak. It does look pretty toppy in here in Bitcoin. We had India say, we're banning it. I love to hear that, to tell you the truth. Our country should do the same. I know some of you are going to say I'm wrong. Can you add QQQ to the simulated stock list? What simulated stock list is he referring to? Anyone know?
I think Harvey, didn't he answer that it was the momentum tracker, and it is in the momentum tracker.
That's right.
It's also in chart streams. It's not in our ranking system, but we have the NDX in there. So there's good coverage on QQQ.
Jim Barr asked for AAL. I don't have that one updated, so I don't have that for you. If you're a level 4 member, you can send us that request. We have a question on Exxon. Arvi, you have that, Exxon?
Yep, I have Exxon.
Okay.
Just give me 1 second.
And while you're at it, Micron.
Okay, yeah. So let's pull up the drawings here for Exxon. So Exxon obviously has had a huge run here. Basically looking for it to actually start to form a high here and then roll back down. You can see it is looking at some of these levels here on the upside. So we'd really be looking for a high to form. So this is what the overall shape looks like. Down into this minor cycle low, a rally off of that minor cycle low, and then we would look for that to then likely roll back down into this nesting period, right, of lows, which comes in around the end of June-ish time period. So that's really the shape here in Exxon. I think it's had
the daily chart. The daily chart
run.
That daily chart gives me the chills.
Yeah, it's had a big run. So really what this looks like, right, is a pullback into this next low and then a rally, and then watch to see if it moves through that low on the downside, right? That's really what you'd be looking for in Exxon,
Right. Well,
to
look at all
give some
those
signs that a high
positively
is formed.
Look at the positively configured cycles hitting the supports.
I mean, this whole way up,
Yeah,
up,
it's
just
just
nonstop. I mean, there's no reason to do anything but be long Exxon, right, throughout this whole time period here. So
Micron.
beautiful. Micron looks pretty decent here. Let's pull up the drawings here.
Wow, what a
So
configuration.
we had this, right, it's moved up for this whole way up here. We had this sharp pullback to form the low, and then now we're moving back to the upside again. If we look at the daily, it formed its low here and is now trying to move back up. So overall, a pretty decent pattern here.
Long side
in
opportunity.
Micron.
One more. You got Intel?
Intel, yeah. I mean, Intel. We did a long side trade idea in Intel. So
Just blew out of that on the upside.
diamond
there.
bottom, right? Beautiful pattern that formed there. Mild little move down here. Flag that turned back up. Daily tested our zone here and has now blasted up nicely off of that zone to the upside and into our target. So picture perfect picture here in Intel.
Wow, great job. Just absolutely great. I'm going to take this screen back from you.
Yep.
And that's great. Well, we covered all of those questions. We barely ran long at all. I'm really excited about it today. Everybody who liked this show, raise your hand. I just need the strokes. I need to see it. There you go. Anybody who hated the show, don't raise your hand. Ah, boy, I'm excited. This was absolutely great. What do you guys have to say for yourself?
That was fun, guys. Appreciate it very much.
Yeah, absolutely. Great engagement, great analysis. It's always fun.
Right. Okay. Great. And remember, level 3 and 4 members, if you have any other questions, you could send them to us. Level 4 members get our charts per your request. And I'm excited for all of you that came. We had a lot of fun, great show, and we will see you next time, a couple weeks.